Let's talk about support and resistance, and in this video I will show you everything you need to know about how to master support and resistance and all the tips and tricks that I've come to know over the past 12 years of being a trader. So let's get into this. And first of all, I will share some general tips about support and resistance, and then we will get into a live analysis of a current market, and I will show you exactly how to apply it in the live markets. So when it comes to support and resistance, the easiest and the first thing that you need to do is look for turning points. Where are big turning points in the market? So we can see it here very, very clearly, and we will just start out to map out and try to find where are common turning points. So you can see those are probably the big ones here. This is the resistance that is defining here the top. You can see we have two very good touch points, and then here the third one, very good confirmation. And then here to the bottom side we have a support area drawn. Those are the main boundaries, and often within such a big range you will be able to find other levels as well, as we will see. What is very interesting is then here on the next point, whoops, let me get rid of this. Just getting used to the new Windows. I've been using a Mac for years and now I just switched back to Windows. So what happens here is that you probably all know the saying that the more touch points a support and resistance level has, the stronger it gets. But this is exactly the opposite. The more touch points the support and resistance level has, obviously the more obvious it becomes, and then it will be harder to profit from it because everybody is trying to jump on it. And then if everybody is on the same page and on the same side, then it will be very hard to make money. So what happens here is that the market fakes out the support and resistance area. Some people call it fake out, some people call it spring pattern, failed breakout, a trap. It doesn't matter what you call it. You just have to be aware that the more often the level has been touched, the weaker it gets and the more likely such a fake out happens. Even when we look within this range, you can see here, there seems to be some type of very nice inside resistance here below this major area. And then the next time the market just faked it out. When we zoom in, you can see that there was some break and retest as well. So this is something that happens very, very often as well. You have a resistance, and then on a breakout, it becomes support. And then the next time you can see the market trends back below it, and it becomes resistance again. So resistance becomes support, becomes resistance. This is something that happens very, very often. You need to pay attention to this. But this here is something that you really will find time and time again. And you should really be very, very careful. The more often a level has been used, the less likely it is that it's going to work in the future. And we have seen this here as well. You can see a very well-defined range with a very good support area. And then the market broke through this. It didn't even pay attention. And then the market came back into this level. You can see, if I just zoom in, and retested it. This is a very, very precise retest. It moves back a little bit from the level and then comes back and retests it as resistance now. And then afterwards you can see a new downtrend has started. So fake outs are very common, and it's probably more helpful in your own trading if you don't focus on the support and resistance trading on its own, especially after a level has been touched 3 times. I would not even consider using it going forward as a new resistance or support area. If it has been used 3 times, it's very, very safe. Either you wait for the fake out or you wait for the break and the retest. So what does this mean? Let's look at this example here. By the way, if you do like those longer form videos, I'm not sure how long this is going to be by now, obviously, but I'm pretty sure this is going to take a while. So if you do like those longer form videos, make sure to give it a thumbs up and leave also a comment below so that I know I need to do more of those. All right. So here at this point, you have seen 1, 2, 3 touch points of the level, maybe even here a 4th one, and then the market breaks out. So if a level has been used 3 or 4 times, what I would do is you wait for the breakout, and then you wait for the immediate failed breakout. So as soon as the market dips back into the range, it is time to consider a short here. You could also use, you could drop to a lower time frame. Let's do that, 2 hour. And by the way, people always ask me, why do I use the 2 hour? I usually trade the 4 hour, but sometimes I think the 4 hour is a little bit too slow, and the 1 hour is a little bit too fast for me. So I really do enjoy the 2 hour. And MetaTrader brokers don't offer the 2 hour by default, but what I do is I chart. I do all my charting on TradingView, and then once I've found a trading opportunity, I open my MT4 and enter my trade there. So it doesn't really matter what TradingView, what my MetaTraders are offering me. So, okay, back to the example. So by now you can see the market has broken out and it has faked out. You can see also the market now is making lower highs, which is a sign of weakness. We have here the trend line, which has then been broken here. The market comes back into the level, makes a beautiful retest, and then starts this huge sell-off. So how do you trade this? There are a few opportunities, obviously. You could, as soon as the market failed here, as soon as this initial breakout failed, you could consider a short, which is maybe a little bit aggressive. Or you could wait until you have real signs that, in this case, you have a trend line. Sometimes you will get a horizontal support and resistance. As soon as the market breaks such a structure, you could also consider going short. Or you wait for the pullback and the retest and then trade this. So this is also an opportunity how you could trade it. So there are many different ways. But the most important point is that after 3 or 4 touch points, don't try to trade the level itself. Wait for a fake out around the level. Or, like in this case here to the downside, a very well-defined support level. The market breaks out again, and then it comes back into this level here immediately. Not immediately, but within a few candles, and then makes a pullback. So you could then also look, okay, where do we have a level here? Oh, you can see the market shortly afterwards build something like a horizontal pattern here, while already making here lower highs. So very nice, you could call this a trend line, a triangle pattern. And then afterwards, once it breaks, you can see how this huge trend has started. So it is very interesting how you could use support and resistance in many different ways. The general textbooks usually tell you that it is good to sell at a resistance level or buy at support, but I rarely found that this is going to work. Also, one thing that I always like to keep in mind is that 90% of all the traders, or 95 or 99%, whatever the number is, lose money. And they lose money, and at the same time, they all read the same books, they listen to the same videos, they follow the same advice. So it's really important that you start thinking outside the box, start questioning what you read in other books and other videos. If you see something repeated time and time again, it is really time to think differently and to apply your own thinking, and maybe try the exact opposite of what somebody else tells you and see how that works. Maybe that is going to revolutionize the way you look at charts. And this is just the first example. So let's move on to another one. And I have prepared something here for you. Let's go to the Swissy knock. And I think this is really going to be interesting. So you can see, okay, how do we draw levels? We want to look for some very obvious turning points. The more obvious the turning point is, the nicer it is going to work in the future. Well, going to work it depends a little bit, because we don't want to trade the exact support and resistance, but we want to trade fake outs and failed breakouts, or pullbacks and retests. So here's obviously a very big one. Whoops. Then here it's a little bit tricky, because we have one high point here, and then the market established a higher point. To the downside, we may have something in here, and now in here. All right, I think we could also draw something in the middle. And by the way, in TradingView, it's quite easy. What I like to do is just hover your mouse, and you see there's a crosshair around your mouse, and you can just pull it everywhere. And then you see, okay, do you have some confluence around the levels here, around the horizontal levels? And that's how you can easily draw support and resistance. We can look a little bit deeper Here I found something as well. Okay, this is good enough, I think. And if you hear something in the background, my dog just woke up. And yeah, so what are we going to do now? So here again, the market has a rally, or rallied here. Then you have the first high, the second high. At this point, people will get interested about the level. Then you have the third high, the fourth high, the fifth high. You can already see the fourth high, it's becoming harder to profit from it. Why? The people, they are looking to sell here, or roughly around here, probably once they saw the rejection. But the market comes immediately back and you probably will get squeezed out of your profits. Here, in this case, the market would have sold off another time, but it will be very hard to profit for the third or fourth time. To the downside, again, it happens, yeah, you have 1, 2, maybe 3 touch points, the fourth, and then on the fifth one, it's the market breaks the level. It comes back to retest it. On the lower time frames, let's go to the 4 hour. Where was the breakout? Let's try to find it. Here, you can see that here was the, and this is, by the way, very, very typical as well. Before you have a breakout, I made a video about this recently. I call this the lower bounce. Before a market breaks out, you often have a little consolidation at the support or the resistance level. This indicates that, what does it mean? Obviously, the market didn't pull away. The market always stuck to the level, which is already here a bearish sign. If there were a lot of bulls, the market would have been able to pull away, but here there were no buyers, there were only sellers left in the market. And then once this pattern breaks, once the market makes a lower low, you can see how it completely sold off. So on the lower time frames, you could also find those patterns here around support and resistance breakouts. And one thing that is always important, if you trade those breakouts, wait for the market to really clear the level. Here you can see, although the market stuck to the level, you don't want to get into a predicting mindset where you are trying to buy before it clears the level. Here the market never traded above the level. Here you can see the market actually closed below the level multiple times. So here was actually a valid breakout, and those are the ones you want to trade. However, I've said in the previous example that often the breakouts, they won't always last for long trends. So what you want to do is you could go to a lower time frame, and you don't want to bank on a huge breakout initially. What you want is that you go to a lower time frame, and then you can exit and enter and exit the market within a relatively short period of time, if this is something that you want to trade. I trade higher time frame breakouts mostly. Well, higher time frames is the 4 hour and above, and there I apply different rules. But if you want to trade those little breakouts, those smaller breakouts, you can be in and out quickly in the market. And you can see very nicely how the previous support area from here now is turning into resistance. Very good effect. You can see very nicely. Again, you have then your first touch point here, which comes a little bit shy, second, third one. You can see you can draw here another pattern, a break and retest pattern, and then a short, a sell-off afterwards. The market then falls back into the range here and starts paying attention once again to the level. So this is really, really a big level that the market has established over a long period of time. It hasn't touched it yet, but I'm pretty sure that you will see some type of reaction. You might not necessarily see a huge breakout, but maybe this could lead to a break and retest to the downside as well. So this is something that you should have on your radar. Then let's go back to the higher time frames. You can see here the market has established this level, 1, 2, 3, 4, 5, 6 touch points roughly, and then on the 7th one it breaks and retests it. On the lower time frame, you can probably see this break in. No, it's very deep. So here you cannot really see the break and the retest here. The pullback is very, very deep. So at this point it gets a little bit messy, and you can see afterwards the market is not really paying attention to this level anymore. And that is another important lesson. Not always will you be able to use a level indefinitely. And once I see that the market is not paying attention to a level for the next at least 2 times or maximum 2 times, I will take it off. So afterwards, after this point here, the market did not really respect the level here. It did not respect the level here. And then I will take the level off my charts, and I'm not going to use it in the future. Here's the same. You can see the market had an interesting local high, here, here, maybe here as well, but then afterwards the market did not pay too much attention to it anymore, and then you don't need it anymore on your charts. You always want to have fresh levels on your charts. There was the dog. To the upside, you can see very nicely as well, 1, 2, 3, 4 touch points, and then afterwards the market didn't come close to it. And very often you will see that, depending on how you draw the support and resistance, sometimes the market will come short of those levels. Why is that? Because at this point, many people will be aware of this level here, obviously, and then many people will front run it. They will just enter a trade before the market gets there. So that's also why trading support and resistance in and of itself is or can be very, very difficult, because there are many fake outs. There are many times where the market comes short of a level, and those are all the difficulties that you will have here as well. You have a local low, and then the market fails to come into it. Here the market had paid attention to it, and now the market is faking out the level. So at this point, it's not really that meaningful anymore. This one, on the other hand, I do like this level. It has been created recently. You have a local low, and then you have a high. So a support turns into resistance, and I will use this going forward. So going forward, I will use this level here, which is still not violated. This one does seem good, and this one here is still also in play. You could even think, okay, maybe there's something currently in the market, maybe where the price is right now. Here you can see it gets a little bit dirty here, so I'm not too big of a fan of this one, but it's not the worst. You will see if the market now on the next touch point, on the next time completely violates the level, I would not pay attention to this anymore too much. But right now it still looks quite decent. And that's how you could use support and resistance going forward. You just keep the important levels on your charts, and the ones that are not important, you leave them out. Here, for example, this one, it's a single low point. We don't have too much confirmation here around this, if this is just a one-time event, or if the market will pay attention to it. But if the market really shows such a strong reaction from a level, you can see the market sold into this and then started this new uptrend, a very strong uptrend. So clearly something must have happened in this area, and that's why I will leave this this level on the charts, and I want to observe how is the market trading into those. I honestly prefer those levels over such a level or such a level, because this one is still fresh. Not many people will pay attention to it, and sometimes you will get very decent reactions off of it. It's not too crowded, whereas this level here will be super crowded once it gets there. This level will be very, very crowded, and you can see even now this one here, people are quite aware of it. Also, this one is not really that exact, because you can see it's more of a zone. You can see there are some levels that some reactions that are coming short of the level. So this is not really that ideal. It's a little bit it's a zone instead of just a single level. So a few ideas here to use it. Let's take a look at maybe two more. I have written down something for you. Maybe let's take a look at the Euro US dollar, a current setup, which is also quite interesting. And this is not relevant. So you can see I have mapped out the most important levels right now. And what I mean with most important is the ones that are interesting for the market development right now. So I don't worry about what has happened here. I really only care about what is happening right now or in the recent past, and which levels are still active right now. Some people will say, oh, you need to go back, I don't know, X number of days or X number of candles. I eyeball it, and I want to see, okay, what fits on my screen, and that is what is really important. So you have a few levels above current price and below current price. You can see here, this has been established here, then 2 points here, and then on the third one, it already gets a little bit messy. So the next time the market comes into this level, this is not going to be very, very precise, what I expect. This is actually something that some of our traders traded. Here, this is what you can call a bump and run pattern, higher high, lower high, lower high, a very well-defined support area, and then the market breaks it and starts a new downtrend. You could have traded this on the lower time frames. Then we have a few other levels. Here there seems to be something, but the market is not really paying attention to it. So sometimes you will see those local lows, as I explained in the example before. But then the market will not pay attention to it, and that's totally fine. You could have drawn the level here, and then once you see the next time the market doesn't pay attention to it, you just take it off. Then you can see there are a few levels below the current price. Resistance turns into support, and then again here it gets more messy. First the market sticks to the level, and then we have a failed breakout, and then you can see, okay, maybe we could have traded this here with a break and retest pattern on the lower time frames. I think this will be quite obvious. You can see the market, this is going to give you a divergence because the market is slowing down. The failed breakout here after the level has been so obvious, and then the break and retest, very classic. And then you can see the break and retest pattern is very popular. Mortgage trades those all the time. And yeah, this is what we are dealing with right now. This level here to the downside is completely untouched, which is still very nice. I do like this. This one here, I'm not too eager anymore to trade this because it has been already violated here once, and it has been used like 4 or 5 times. This here as well. This is not one of those nice levels because it's more of an inner support or resistance line, which means that the market doesn't really have the big turning points on it. You can see it more or less just shoots through it, and then it has those immediate break and retest patterns. Here as well, break and retest. Here it doesn't care about the level at all. Here it does care about the level again. So this is not going to be a high probability level. I would personally take this probably off. And what I would do is instead look for local lows, which is this one here. Might still be interesting. This is maybe topic for another video. This is a demand area. This is the origin of this uptrending move. So this is worth having on your charts. Probably this is even worth more on your charts than this one, just to clean up the level. And this one here clearly is also very important to have on your charts. So yeah, I think with this is how I would how I'd leave the chart for now. We have the local high defined. We have the last breakout area. It's very likely that you could see here a retest. This is happening quite often. Break and retest. Maybe back into the demand area, who knows. This one, I'm not too sure if this is going to be super meaningful. Probably in my trading I would not be too worried about this because you have a local low and you have a demand area. And what happens is that the market usually gravitates towards the lowest area. So it's probably not going to pay attention to this area too much because this is where the market really wants to go. There are a lot of buying orders here. So this is something that the market often gravitates towards. And this one here, obviously. So those are good levels to have on your charts. Let's take a look at the British pound US dollar as the current example, and maybe let's do a top-down analysis. And we can start. So here's the current price, obviously. And when I start a new fresh analysis, what I want to do is I look for support and resistance above and below the price. And you want to only look for the next one. So you can see here a very big area, but at this point many people were aware of it, and then there was a fake out. So again, the more often the level has been used, usually the weaker it gets, and maybe not necessarily weaker, but it's more you can expect more fake outs. Then we have some level here. Here it's a little bit, maybe it's not too bad. Here it's not not the worst level, and obviously, but this is going to be very far away. So here is some type of demand area, the origin of this huge spike. So I think for now this is good because we want to trade this on the lower time frames. So you don't need to worry about what has happened here. Although there is some supply in here, this is going to be something not for the immediate future to worry about. So just worry about what is happening right now and where the market is. Then we can go down to the 4 hour. Let's see what we have. So we clearly have some supply levels. I think my dog is a little bit annoyed that I'm talking while she's sleeping. So here is clearly a supply level. Here, this level seems to be used right now. Can see again 1, 2, 3, 4 touch points. Then here the market breaks and retests it, and now again the market is really sticking to the level. It's not able to pull away, so this could mean that there's a high likelihood that the level is about to break and the market is ready to sell off. This is also what you would call a bump and run pattern. So after a trend, there come this final push where the market tries a final attempt, it does fail, and then it breaks lower. You can see here was even already here some type of break and retest pattern. This level here, yeah, I think this is not really that precise, so I would probably not worry too much about this one. Yeah. Not sure, maybe I will leave it on, but there are bigger levels below this, below this one. So here I think this one might be something to really consider, and that's a good tip. If you have multiple levels on top of each other, you will often drive yourself crazy because you can always draw so many different levels in so many different ways, and then you end up with a chart that is cluttered with different with levels all over the place. And only what I do is I only focus on the big levels, the ones that really stand out, and not worry about all the nitty-gritty levels in between. So here you can see this seems to be quite a big level, a decent reaction, a break and retest reaction, whereas here, yeah, it's a tough call. It's a tough call. You can see it has been used here, it has been used here. Afterwards, here the market came a little bit short of it, here as well. So it's not really the most precise level. Here the market did not pay too much attention. Yeah. So what I would do is focus on the levels that are outside of it. I don't want to drive myself crazy. So what I would do is probably I will focus on this level and then on the lower demand area. Inside such a range there will always be some levels, but yeah, you need to give yourself some room, not worry about every single level that you could draw on your charts, and this is usually what works quite well for me at least. Another way, I'm not sure if this is going to apply here. Some people like to use Fibonacci, so you could draw it from the low to the high. You can see the 61 roughly lines up with this one, the 38 lines up with this one pretty nicely. Just another idea. You could use also moving averages. Some people would draw the Fibonacci from the last swing point, and then yeah. But I think eyeballing it, support resistance together with supply and demand, that is really where I get the most value for my trading. So if this level breaks here, there's a very good chance you will see a push into this one, and a very good chance also if the market really trends lower, it has a very good chance of gravitating towards this area. If it doesn't, if the market fails to move lower and actually makes a push to the upside, here is where I could imagine the price going. The market, and once you start really understanding those supply and demand areas, you will see that the market really is gravitating towards those areas. The supply and demand areas, they're really pulling in the price action very, very strongly at times. So let's take a look at maybe final example. We have taken a look at most, but let's take a look at the Euro Norwegian Krona. Let's take a look and try to do another top down. All right, so let's start on a daily. So the market has been selling off for a while. Where are the next levels? Here is one. Support, and resistance, flip zone. Resistance turns into support. Here's probably some type of level, although it's not too strong. And I don't think we need to worry about those here, and I don't think we need to worry about those, because if we want to trade on the intraday basis, those are yeah, too far away. Let's see if we can fine-tune the levels and find other ones. So this one might not be the worst, not the strongest one either, but this level has not been retested yet. There was a very decent breakout here, and there's a good chance the market could come back. Then here, this one is, I think, is a good level. hasn't been here it has been faked out, but there has been some good reactions, and you can see very strong reaction, strong market, strong trend after the last reaction. Then here I think is some level we also need to be aware of. This is the origin, you can see that. You can see here there's a very strong rally, and here was the breakout out of the range. So those breakout points, they are often then new demand areas in this case. Very strong demand area, strong breakout, strong trend. So you clearly want to have this one on your charts as well. And what I've seen often is that if you see something like this, that you have a demand area underneath this resistance area, the market sometimes overshoots those levels, and the market is really dipping into demand instead of paying attention to the resistance area. So in this case, I would not worry too much about the resistance area, but I would really look at the demand area below that. And then here obviously the low, the bottom where it all really started, it's also important. So on the way down, I think those are the big ones that you need to focus on. Here, this demand area, and then here the absolute bottom. To the upside, there are not too many that I would really worry about. Here maybe as a retest, and then here this one. And obviously, if you want to really complete everything, this is the origin of the recent selling point after this rally. Then you would have this also. And this is really all you need on your charts. You don't need to drive yourself crazy. And now what you want to do is wait until the price gets there. You just don't do anything. You wait until the price gets here, and then you either trade a reversal or a breakout. Maybe a break and retest, maybe a fake out. Those are the things that you can now wait for. You don't need to worry if the price is just in between levels. That's not going to be very consistent trading, because markets, they usually they gravitate towards those levels because that's where the power between the buyers and the sellers shift. That's usually where new trends are started, and that's also where you often find the best opportunities. And that's what I would recommend. If the market sells off, let's try to get rid of all this. Let's see. Okay, this works. If the market completely sells off, you could wait for the market to get here, wait for a reversal. This is a pretty fresh area here. Demand area hasn't been touched yet, so there's a good chance that you will actually see a breakout or a reversal, or you wait until the market gets completely here to the low, and then you see either a reversal or a breakout. Obviously, at this point, we don't know yet, and you don't need to know in advance what is going to happen at a level. You just try to come up with trading plans, which can be reversals of a level, it can be fake outs, it can be a break or a break and a retest. And then once you are prepared for one of those scenarios, then you can anticipate those and trade them in your trading. So I really hope that you enjoyed this video. It's a little bit over 30 minutes, which I think is a good time to end this. Really let me know in the comments below if you enjoy those longer form videos, if you want me to go even longer, and also let me know what you want to hear about in the next video. Until then, have a good day and safe trading.